All right, perfect. Time to get started. Welcome, everybody, to this webinar today, Fact, Fiction, and the Truth About Day Trading. I want to thank fxstreet.com for having me here today. So I've been conducting webinars for fxstreet.com for the past, 2 or 3 years, and this right now, today, is the start of a new webinar series. For those of you who have been following me for a while, you know that we like to do these webinar series because there are a couple of things that you need to know if you want to successfully day trade. My main focus is on day trading, and you know why. I mean, just look around these days in the markets. Who in his right mind want to stay in the market while they gap overnight? I mean, it is different, obviously, in the Forex markets, but if you are trading other markets, then only the currency markets, you know that we have these huge gaps. Markets are wild and volatile. And until recently, until maybe 2 or 3 years ago, everybody said, day trading, gosh, are you kidding me? This is risky, it is dangerous. Well, look at holding positions right now. I think your IRA might make larger swings than actually you experience throughout the day. Anyhow, so let's take a look at today's agenda, what we're going to cover. So today we want to talk about why some traders always seem to make money while others are struggling. We'll talk about the real problem, cause traders to lose money, the 6 common mistakes of traders, how to avoid them, why the old approach to trading doesn't work anymore, especially in these volatile days. I want to present to you a new approach to day trading, show to you why this works, the 3 fundamentals of day trading success. We'll talk about the essential skills profitable day traders, how to master them. Plus, if we do have time towards the end, we'll talk about an easy-to-learn day trading strategy that you can implement in your trading right away. And if you do not have time towards the end, we can definitely cover this in the next webinar, or I will also show you where you can find more information about this. But you see, it is most important that we talk about a few other things first before we talk about a specific day trading strategy. And it really doesn't matter whether you're trading in the Forex markets or the futures markets or commodities or even stocks. I mean, this here, what I'm going to talk about is applying to all, or applies to all traders. So last year we did a survey of 800 traders. Asked, what do you think would help you to achieve your trading goals? And more than a third of these traders said, oh man, all I need is a good trading strategy. If I just had a good trading strategy, then I would achieve my trading goals. Others said if I had proper guidance and if I had the right knowledge. So these were the most common answers here. Well, you know what? I thought, okay, why not? Let's do this. For more than a year now in webinars, I have been presenting a profitable day trading strategy that can be traded on rather small accounts. It is great for trading index futures or Forex futures, whatever you're trading, or even Forex spot market. It's averaging anywhere between 5 to 10 trades per day. And I'll show you on the next slide while I got a little bit frustrated. And what we did here, September 2008, beginning of September, we started trading this strategy live in front of an audience. And thus far, since September 2nd, we made a little bit more than 200 trades. 140 of them were winning trades. So we're talking about a 63% winning percentage, and the total profit per one lot, or if you're trading one contract, again, we're talking about hypothetical profits here, and we'll talk about that in a minute, why that is. It's a little bit more than 20,000. Did I get your attention thus far? All right. Now here's the problem. Exactly this trading strategy I've been presenting for more than a year in webinars. Now, what I also did is I produced a short video where I said, okay, so anybody who's interested in this trading strategy, I have a 2-minute video that I put up on the website outlining what it is. And if you want, you can request more information with the exact rules, and everything is for free, okay? The exact rules, how to set up your charting software, and here are some key statistics. So, over the past 6 weeks, more than 2,000 traders watched that video. So, oh yeah, this is interesting. Now, as you can see, 912 traders requested more info. So what about the other 1,300 traders? Well, these 1,300 traders looked at the strategy and say, you know what? This is not my style. And that is absolutely fine. You have to find a trading strategy that fits you. Otherwise, you won't have the discipline to follow it. So I'm absolutely fine that 1,300 traders out of these 2,000 said, yeah, you know, this is not really for me. I'm looking for something different. However, 900 traders, a little bit more than 900 traders said, yeah, this looks pretty cool. I want to know how exactly to trade this, and I want to know how to set up my charts and all this. And I mean, again, this is what I've been doing for more than a year. I just put the video up here a few weeks ago, maybe 5 or 6 weeks ago. Now, I also said, okay, for those of you who are interested, we do have this live trading room, so it's every day for the first 2 hours in the morning where I can show you how to trade this strategy live in the markets every morning. However, I don't want to have a bunch of freeloaders in there, so I said, okay, give me $1. Would you mind giving me $1 for doing this here? Okay, so we have close to 200 traders joining the trading room. Now, surprisingly, out of those 200, we have maybe around 100 to 110 traders who are actually showing up. Well, I recently asked these traders, how many of you are actually trading this strategy? 10 to 20 said, I'm doing this. And this is me, the picture here. Asking myself, what is wrong? Because, let me just quickly go back. Most of the folks that we interviewed and said, what do you think would help you achieve your trading goals? Said, well, 34% if I just had a good trading strategy. All right, look at this trading strategy. Is that a good trading strategy? Yes or no? If you can make up to $20,000 here in more, 6 or 7 weeks? Okay, so we're presenting this. It's exactly the same strategy that I've been presenting here, and only 10 to 20 traders are trading this strategy. So I was wondering, what is the problem? What is behind there? You see, this is a statistic that you might have heard. 11.5% of traders are successful. Now, 70% of traders fail. What does it mean? Fail, losing money. And out of these 70%, most of them are losing basically all the money they had when they started, so their whole account. We have 18.5% of traders who are somewhat breaking even, so they're making it. They're making a little bit money, and they're giving a little bit money back to the markets. So the question you need to ask you is why that is. And if you look at the statistics that I just shared here on the previous slide, you see that out of these 2,000, I just have to go back because it's really, okay, out of 2,000 traders, we are talking about 1% that just takes action. Well, here, 10% are successful. Okay, so that's even better than the traders who have been watching this video here. See, well, what I experience is the mindset. This is the typical mindset that many traders these days have who are new in the market, so haven't been around for a while. Just have the mindset, get rich quick. And they read these ads and see all the websites and see the infomercials that you can make millions with trading, starting with less than $1,000. This actually from a Google ad that I saw recently, where it says, make millions starting with $1,000. I think it was for an options trading course. Don't know exactly who it was. They say all you need is a computer and possibly an automated trading strategy. And the biggest misconception right now these days in the marketplace is that everybody can make money with trading. That is not true, and we'll talk about this here in a little bit, because you need to have certain character traits. Trading is a profession, and we'll talk what do you need in order to succeed with trading. And it's not for everybody. Don't get me wrong. It is not for everybody. In previous webinars, we already talked extensively about the top 6 reasons why traders lose money. And I just want to quickly throw it up there and show you the slide here. And we don't want to talk about this extensively because we have been covering it. And if you're interested in a little bit more information about the 6 reasons, the moderator has just posted a link here to previous recordings. So please look it up. But the top 6 reasons why traders lose money is number 1, the lack of a trading plan. And when talking about a trading plan, it is more than just having a trading strategy. Just think about it for a moment. What is the difference between a trading strategy and a trading plan? And you don't have to answer because by the time you type it in, I've already answered the question. I mean, we're a little bit short in time here. We have 45 minutes, so want to get going. Want to learn a lot here in this 45 minutes. I mean, you're investing some time. So I want to give you the maximum information possible. What did I want to say? Okay, the difference between trading plan and trading strategy. A trading strategy tells you when to enter and when to exit the market. A trading plan is more comprehensive. A trading plan also includes what markets you want to trade. It talks about money management. It talks about position sizing. It talks about when should you trade, when should you not trade. For example, the trading times throughout the day. See, it's more comprehensive. It's talking about your goals and all these kind of things. And few traders have a trading strategy. Even fewer traders have a trading plan. Now, the second reason why traders lose money is the lack of discipline to follow the plan. Why don't they follow the plan? Well, maybe it contains a trading strategy that is not for them. And this is why I said previously, I'm absolutely fine. If 1,300 people, more than half of the people who are watching my trading strategy say, this is not for me, you have to make sure that you are comfortable with the trading strategy. Otherwise, you will not follow it. The second reason why traders don't follow their plan is exactly what is here. The third reason why traders lose money, the failure to control emotions. In the heat of the action, when the market is moving, traders just think, oh gosh, I'm missing an opportunity here. I need to jump into the market. It's dropping like a rock. It's not an entry according to my signals, but I'm missing the train here, okay? Or emotions like greed, fear, revenge trading. You heard about this. All these emotions are up, and we have a complete webinar coming up next month about emotions here on fxstreet.com, because it's so important to know about your emotions and to control them. The fourth reason is the failure to accept and limit losses. Always have a stop loss in the market. Okay, not a mental stop loss, a physical stop loss, really as an order here. Fifth reason, lack of commitment, especially these days. With all the hobby traders in the market say, yeah, I can do this on the side. Whenever I have time, I trade a little bit. So like in the evenings when I'm coming home from work, we'll talk about this. Trading is a profession and you have to dedicate time. It requires time and effort to become a great trader. Sixth reason why traders lose money, overtrading. They keep trading. Traders overtrade for three reasons. Number one, being bored. There is nothing to trade. The markets are just going sideways. But you have this feeling, if you don't trade, you don't make any money. Well, newsflash, if you don't trade, you also don't lose any money. In order to succeed with trading, two conditions have to be met. First, you have to be ready. Second, the market have to be ready. So make sure that both of these conditions are met before you start trading. Second reason for overtrading, revenge. Started trading in the morning, you lost some money, and now you want to make it back. So you're there, and you say, come on, market, I show you, and you just keep trading. What happens? Usually you extend a losing streak, right? So not a good idea. Continue trading because of revenge. Third reason for overtrading, greed. Want to make more money. You started trading off in the morning. It looked good. 2 or 3 winning trades in a row, and you think, today is my day. Today is my lucky streak. Today I'm making back all the money that I lost in the markets in the past day, week, month, whatever. Okay? So don't do this. Very, very important to be aware of this. Trading is a profession. And I'll show you a couple of examples here where you say, this is ridiculous. Or I say, do you want this guy to defend you in court who has read the book Law for Dummies and Law 101? Everything you need to know about the American legal system? Of course not. And you right now just think, this guy's crazy. What is he talking about? But you see, surprisingly, this is the idea that some traders have when they start trading, some wannabe traders. They read Forex Trading for Dummies, and don't get me wrong, it's probably a great book. I haven't read it, so I don't want to do the book injustice. But reading a book is great to get an overview, to get started so that you know what to expect. Unfortunately, this is what most traders do. They just read a book, or they buy an ebook, or they surf some information, or they listen to a free webinar, and then bang! Open an account. Hey, it's so easy. You can open an account with $500, right? Get started. Don't do this. First, educate yourself. So you don't want this guy to defend you in court. So would you, just think about this for a moment. Would you trust a guy with your money who just has read the book Forex Trading for Dummies and say, okay, just I've got to trade the money and I'll make you millions of dollars. Of course not. So ask yourself the same question. Would you trust yourself with your money, with the education that you have? See, the problem is the wrong approach. Most traders think the goal is I want to make money. So maybe I should trade. Getting rich in real estate didn't really work in this market, so now I'm selling my houses and I'm getting some money out of this, and now I start trading. Hey, looks like fantastic opportunity, right? The strategy, the strategy is read a book, attend a seminar, buy strategy, or maybe you can get it for free. And last time I checked on Google, if you type in trading strategy, I think it's 22 million pages that are coming up. They're talking about trading strategies, that are offering trading strategies for sale or for free. 22 million. It's quite a bit, right? Executionary, let's just get started. If it doesn't work, probably a bad trading strategy. So let's get the next one. And I always use here the example of marriage. If you have a goal of getting married, or maybe your mom has this goal for you. So I want to get married. So what's the plan? You go to a single bar, you spot the most desperate girl, buy her a drink, but don't spend too much. You know, all this dating, and it's expensive. You know, these fancy restaurants and going on trips and buying her flowers and buying her presents. So I mean, you want to make money fast. You want to get married fast here. So let's get to business here. Buy her a couple of drinks, don't spend too much, propose to her, and say, get married. Yeah, right, this works. And when I ask, okay, this guy's nuts. Well, what does this have to do with trading? Well, I experience every single day that this is exactly the way how many wannabe traders are approaching the markets. So, they just say, instead of, I want to get married, hey, I want to make money with trading. So, going to a single bar, they go to a forum or a website, spot the most desperate girl. So find the website that promises you everything. Buy this trading strategy ebook, but don't spend too much. Surprisingly, $97 seem to do the trick for most of the trading strategies that make you millions, starting with just $1,000. You know what I'm talking about, right? Get married, yeah, right. Make money trading, yeah, right. Doesn't work this way. So the old paradigm that what many traders have in mind is all you need is a trading strategy and you'll be making money. That is not true. And this is why before presenting you actually a real trading strategy, I want to give you the right mindset. Because otherwise, you might end up like the majority of these 2,000 traders, or I mean over the past year, it has been several thousands, probably already 10 or 12,000 traders that have heard this trading strategy, but today they're still not applying it. So make sure. This is what I want to do here, give you the right mindset before giving you a trading strategy. In previous webinars, I talked about the Ralph Vince experiment, and I also want to very briefly talk about this. What Mr. Vince did a couple of years ago, he took 40 PhDs, placed them in a room in a simulated environment, and gave them a trading strategy with a 60% winning percentage. Every single person had a starting capital of $1,000, and they were supposed to make 100 trades. Now, with a winning percentage of 60%, as you can imagine, 60 trades were profitable, 40 trades were losing trades. Now, the way how it worked is that the participants could risk any amount between $1 and their whole capital on any given trade. So if they risked $50 and they won, they made exactly $50. I see, I don't have to be a market wizard right now. If you would just risk $20 on every single trade, or maybe $24 on every single trade, you would come ahead of the game. Because even if you had the 40 losing trades in a row, you just would lose $800, and then you have 60 winning trades in a row, and you make back $1,200. So you're ahead $400. Cool, huh? Quite easy. However, you see what happens here. As a result, 38 out of 40 PhDs, 95% lost money. Why? Mr. Vince concluded because of a gambler fallacy and poor money management. See, coming back to the old paradigm here, all I need is a trading strategy to make money. Well, obviously not, as we can see here. So there's more to trading than just having a trading strategy. The new paradigm to trading that we have been presenting for, I don't know, past 2 years, 3 years, something like this, okay, is that yes, a trading strategy is important, and you see it here, the very bottom, the trading plan. Inside the trading plan is the trading strategy. But as said previously, a trading plan is more comprehensive. But where should you start off? Very top, and let's go around here clockwise. First, you have to define your goals, and on the next slide we'll talk about this. Why it is so important to first define your goals and your preferences. You then have to start with the right mindset. After you have the right mindset that trading is not a get-rich-quick approach, you need some fundamentals. I mean, it is like going to school. You have to learn how to read, how to write, how to calculate before you become a lawyer or a doctor or whatever you want to become. So the same here. Whatever kind of trading you want to do, whether position trading, swing trading, day trading, forex trading, futures trading, stock trading, all of these traders need at first the same fundamental skills. And we'll talk about those, what those are here in a little bit. Then, based on this, you build your trading plan. You specialize yourself. Like you do after school. If you finish school, you decide, okay, what exactly do you want to do? And if, for example, you go to law school, you can then, again, specialize and say, I want to become a prosecutor or a defense attorney, or I want to do tax law. I mean, I want to practice family law, whatever this might be. See? Just do it in order, like with every day that, with everything that you do in your life. Now, based on this, you start trading and you gain experience. And I compare this to driving a car. Do you remember the first time when you entered a car, when you were on the driver's seat, maybe at the age of 14 or 15 or maybe even younger, with your dad somewhere on an empty parking lot or an empty county road? Your dad was sitting in the passenger seat and told you how it works. It's not that complicated, right? I mean, you have the brake pedal, you have the gas pedal, and you have the steering wheel. And all you need to do is basically accelerate, brake, and steer. At first, this was terrifying, wasn't it? I mean, it was somewhat fun, but I remember I was going down the road with 20 miles an hour, and this seemed to be incredible fast. I was wondering, how could I ever drive somewhere downtown in traffic in rush hour? Or on a German highway, and you know, in Germany, the highways, we don't have any speed limit. How could I ever drive this car up with 150 miles an hour? What has changed to today? Did I learn any new strategies? No, in my car, I still have a brake pedal, I accelerate, and I steer. But what has changed from the first time I entered a car and today? Experience. I became a more experienced driver. Now I even don't have to think about all the things that I'm supposed to do before turning. Remember this first time? Okay, before turning, you look in the one mirror, you look in the second mirror, you set this turn signal, and so on. You look over your shoulder, you start steering. And at first you really need to memorize this. Now, the same is true in trading. At first, it is scary. Of course, it is fun. I mean, there's a reason why you want to do this. But at first, it is also somewhat scary. And the first couple of trades might not go as well as you thought. See, in Germany, where I learned how to drive, we have a clutch. So we have stick shift. Okay? So we really have to do this. So you have to release the clutch slowly, gently, press the gas pedal, and then you start rolling, and then you have to shift it to the next gear, and some of you know exactly what I'm talking about. And it all sounds easy, but I mean, in the first couple of trials, I was Captain Kangaroo, padung, 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 over the parking lot here. And the same can happen when you start trading. So the first couple of trades will be rather bumpy. Don't give up. What would happen if you gave up driving then? To date, you wouldn't be able to drive. You don't do this in any other profession, but here, when it comes to trading, people give up and look for the new strategy. Well, what could be another strategy for driving a car? There are not many, and the same is true in trading here. We apply the same fundamental principles that we'll talk about this year in a little bit. All right. Also, based on the experience, you get feedback. Either you gave yourself feedback or you got feedback from a professional. You might have had a coach or a mentor or a friend, a good friend, giving you honest feedback. Hey, dude, this is where you screwed up. Yeah? Or also, maybe your spouse who then encouraged you. So keep going. I mean, whatever you did in life, in your profession, thus far, it probably happened to you that you had some failures, right? It happens to everybody. And then you had somebody cheering you up, motivating you. Worst case scenario, it is yourself, okay? Getting the feedback and say, come on, you can do this. But it's very important to have this external feedback. And this is why I encourage all the traders. Please, work together. Find a trading buddy who can give you some feedback. Sometimes we are blind. Find a trading buddy. Find a professional trader. Find a professional trading coach, a professional mentor, something like this. Don't do it on yourself. No, it sounds so great. All you need is a computer and you can get started. No, please. And I'm just about to write a blog entry about this. I hope that you guys are all reading my blog. I think it's good because I'm writing this stuff. Anyhow, I'm writing about why you must stay in contact with other traders. And this is where FX Street here is doing an excellent job bringing traders together in these webinars here. And this is, yeah, like a Forex Facebook. Okay, there's something. Anyhow, it's pretty cool, yeah? Establish connections so that you can get feedback. All right, let's move on. So, we talked about the goals. First thing that you want to do. Your goals should be SMART. SMART being an acronym for specific, measurable, attractive, realistic, and having a time frame. And you know about this. There's nothing that I came up with. This is what you can read in books, and I think these days they teach it in colleges and maybe even in high schools, having SMART goals. Now, there are a few more things, as you can see here on the list. I just want to go through a few because you can read this on your own. Don't have to read this for you. But let's maybe talk about this. Yeah, how much money can you put into your trading account? Do you believe that you trade a trading account of $5,000 differently than a trading account of $2 million? Of course you do. If you have a rather small account like $5,000, you want to double and triple and quadruple it. If you have a larger account like 2 million, maybe you're happy if you're making 40 or 50% a year. So you're trading it more conservatively. Also, you cannot be as active. See, for example, your trading doesn't really matter whether you're trading the Forex markets or if you're trading the futures. You're trading, for example, the E-mini S&P, one of the most liquid markets in the futures market, and you place a 30 lot, not a problem at all. If you try to place 1,000 lot, I mean, you might run into problems having split fields, start moving the markets, okay? So very important, use different trading strategies, obviously, for different account sizes. Take a look at this. How much time do you have to trading? When can you trade? In the mornings or in the evenings? In the U.S. here, if you're living in the U.S. and you can trade in the mornings, you know that you should apply a trend following strategy because in the mornings, the markets are usually trending. However, if you have certain restrictions because you have a job or are you busy otherwise, and you can only trade in the evenings you should apply a trend fading approach because the markets are usually just going sideways. They're not nicely trending. You see how your goals and your restrictions, your preferences here are influencing your trading strategy, and you see how important it is to first write all this down. And this is part of your trading plan. And you want to write this down before you start looking for a trading strategy because otherwise you don't know what you're looking for. It's basically like going to Best Buy and tell these guys, I want a TV. All right, they'll ask you, what kind of TV do you want? Do you want to have a flat screen or do you want a rear projection? What exactly do you want to do with this TV? Do you want to have a plasma? Do you want to have an LCD? So the same here in trading. Make sure that you specify all this. What's your pain tolerance? How many losing trades in a row can you endure? Because this will probably determine where should you set your stop loss and your profit target. Let me give you a very specific example. If you have a typical trend following strategy, and the trend following strategies that we teach usually use a risk reward ratio of 1 to 1.5. So for every dollar that you risk, you're making $1.5. This is the goal. So you have a profit target of, let's say, 150 and a stop loss of $100, just as an example here. Now, this yields to a certain winning percentage, and the winning percentage is usually for this risk-reward ratio anywhere between 60 and 70%. Now, if you increase this ratio and say, for example, and this is, by the way, the ratio that Van Tharp calls multiple R, that for every dollar you want to risk, you want to make $3, then your winning percentage decreases automatically because the winning percentage is a function of this, decreases to approximately 50%. Now, you know that there are some trading strategies out there, the so-called hit and run trading strategies, the home run trading strategies that are looking maybe for a risk reward ratio of 1 to 5, 1 to 8, or 1 to 10. So you're risking a small amount, you're risking $100, and if you win big, you win $1,000. However, you might have certain losers in a row, and your winning percentage can drop down to 20 or 30%. The strategy overall can still be profitable, but is this a trading strategy that you can do? Do you have the confidence to actually place another trade after you had 8 losing trades in a row? Do you have enough confidence to place the 9th trade? See, all these factors are so important before you look into any trading strategy. Do you get the idea? All right? The right mindset, second thing, and we talked about this so very briefly. Trading is a profession. It's not get rich. It requires, like every other profession, effort, time, and commitment. And most importantly, guys, and this is for those of you who are thinking about trading right now, let me tell you, trading is not for everyone. The CFTC and the NFA actually asks every professional in this industry to put out the following disclaimer. Futures options and forex trading involve substantial risk of loss. Did you know that? And is not suitable for every investor. It has a large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them. You must be willing to accept these risks. Don't trade with money that cannot afford to lose. So, here are a couple of examples. If you intend to trade your kids' college funds, trading is not for you. If you cannot accept the fact that there will be losses, trading is not for you. You know these kind of people who always want to be right? You know these kind of people who are never wrong, can never admit a mistake? If this is you, trading is not for you. Okay, let me just say it plain out now. If you know that you have a problem with discipline, you know that discipline is important for your success, trading is not for you. Right now, take a look at your desktop. What does your desktop look, or does your desk look like? Is your desk messy, or is it nice and orderly? Or do you have a stack of papers there that you, this is the stuff I still want to do? Then look at your desktop of your Windows platform here. How many icons do you have on your desktops? More than 5? More than 10? Is your whole desktop full of icons? Well, maybe you have a problem with organization and discipline here. You see, there are a couple of other questions that you can ask yourself, but you know whether you're disciplined or not. It's always funny to hear a German talking about discipline, right? Isn't it? Okay, anyhow. If you know that you're short fused and have a problem controlling your emotions, trading is not for you. Now, if you know this, road rage guy, welcome. Okay? You can stand in front of the screen all day long and start yelling and screaming at the markets. Believe me, the markets are pretty unimpressed by this. If you know that this is you, trading is not for you. If you want to get rich quick, believe that this can be done without any investment in time, effort, or commitment, then trading is not for you. Las Vegas might be the place for you. Playing the lottery might be the right place for you. Discouraging? Yeah, this is usually the time, and this is why I'm keeping an eye on this, where people start losing the room and say, what is this guy talking about? All these other guys tells me everybody can trade and everybody can make millions. No, based on my experience, and believe me, I know a lot. I've been around for a while. No, it is not. I know exactly if I'm talking to you and ask you a few questions and discover these things, I know that you really have basically no chance to make it with trading. And let's just be honest. Then in this case, guys, it's better to quit now before losing a couple of $1,000s. Let me save you some money. Okay, but let's move forward. The right approach. And usually there's a PowerPoint that builds nicely, so the girl is coming in a little bit later here. Anyhow, let's quickly talk about the slide. What do you want to do? First, you define your goals and make them smart. We talked about this. Then, based on this, you select a trading strategy and make a plan. Have a written plan. And then the third step, and the most difficult, actually execute the plan. And this is what I want to show you with this example. If you have a goal, for example, to lose 10 pounds in 10 weeks, and probably 90% of the folks here in the room at any given time in your life, were looking at the mirror and said, I could lose 10 pounds. Okay? So you experienced this. Is this specific? Yeah, absolutely. As soon as a goal has numbers in there, it's specific. Is it measurable? If you have a scale and you can step on it, it is measurable. Is it attractive? Well, as I said, for 90% of the people, usually it's attractive. You would lose 10 pounds. Okay. Is it realistic? According to specialists, yeah, it's realistic to lose a pound a week. Does it have a time frame? Yeah, it says 10 weeks. So here's the plan. Well, secret plan. I already spoiled the secret here. Eat less, exercise more. Sounds easy? Hard to do. Have you ever experienced it? Sunday football. What is Sunday football without some chips, some snacks, and maybe a beer? Huh? It's not really Sunday night football, is it? You're coming home and you have had a stressed day and you're stressed out. It's easier to put in a pizza in the oven than to make a healthy meal, prepare a healthy meal. When you go out eating, you know that you should eat a salad. What do you order? A big fat steak, okay? Anyhow. See, this is the problem. We have a problem executing the plan, and the same is true in trading. And what do? We look for the next trading strategy. That is why, right now, these days, in America, North America, Barnes & Noble, the largest selection of books is on dieting and exercising. So, great industry. And the same, unfortunately, is true in our industry. Because of your disability to have the discipline to follow actually a good and solid plan, come to the next trading strategy. And it's another blog post I need to write. Gosh, I really have to write, so that I give you all the information. Talked to another guy the other day. He said, you know what? With all the money that I spent thus far on education, on trading strategies, on going to seminars, I could have bought a house outright, believe me. And this might be true for many of you who have already attended webinars, attended seminars, spent countless hours surfing the internet, reading, spent probably thousands of dollars already on education, but still no results. And why is this? Well, maybe you got wrong education. This is one part, but maybe also you're not doing what you know you should do. So what should you do? The fundamentals. By now, if you have been learning about trading for a little bit more than 4 weeks, let's say, by now, you should know these 3 fundamentals, because every educator is teaching this. I think every serious educator. In every serious book, you'll find this. Every professional traders are applying these fundamentals. And what are these? Principle number 1, trade in the right direction, which means that you want to buy when the market is going up and sell when the market is going down. Right now, let me see here. Grabbing a book out of my shelf, and I'm holding it in my hands. And Jack Schwager says about this book, one of the most highly regarded financial books ever written. You know what it is? Reminiscences of a Stock Operator. The book about Jesse Livermore. And Jesse Livermore probably, if you look it up on the internet, they say this has been the greatest trader of all times. You remember his famous saying? The trend is your friend. And this is what we want to do here. It's the way of least resistance, and we'll talk about this on the next slide. Buy when the market is going up, sell when the market is going down. Of course you can make money in sideways moving market. Of course you can use trend fading approaches. You can buy into weakness and sell strength. But this is the easiest way. Principle number 2. We got to move on here. Always know when to exit. Know when to exit with a profit and know when to exit with a loss. Good traders have a stop loss in the market. Great traders use profit targets. Why should you use profit targets? And we'll cover this in our upcoming webinar, Conquering Greed and Fear, which is coming up next month. Because of your emotions. Set your trade on autopilot. Before you even enter a trade, know when to exit. Far too many traders, unfortunately, far too many traders are just focusing on entry signals. Guys, here's the news. Money is made and lost when you exit the market, not when you enter it. A monkey can enter the market. It's the art of exiting. When exactly do you take a profit? When exactly do you bail with the loss out of the market here? So, want to make sure that you have always a stop loss and a profit target in the market. And principle number 3, The right market to trade is the trending market. What does this mean? It means do not trade only one market. If you only trade one market this morning, I answered an email from a trader who says, I'm only trading the E-mini S&P. My first two words that I wrote back to him said, big mistake. Okay? Because there are some days when the E-mini S&P is not trending. But at the same time, for example, you see the euro versus the dollar trending, or you see the bonds trending, or you see the grains trending. And if you apply this principle, you're looking for a trending market. But don't be single-minded here. Don't say, I'm just trading the euro versus the dollar, and when I master this market, I move on to other markets. Wrong approach. Remember my two words, big mistakes. Watch multiple markets, then you have more choices. And this is what it's all about in trading. It's about choices. It's about making the best choice in the moment when an opportunity presents. Just a very brief example, and then I know that we have to move on here. If you want to have an ice cream and you go into a store, grocery store, I don't know, the corner store, and I want to have an ice cream, and they say, wonderful, we have strawberry and vanilla. Say, I was looking for chocolate. And I say, well, we have strawberry and vanilla. What do you want? What do? You were in the mood for an ice cream. You start compromising and go for vanilla. After all, you got your ice cream, right? It's not exactly what you wanted. This is unfortunately what most traders do when it comes to trading. They have a plan. They know exactly what they're looking for in the market, but you don't see exactly this, so you start compromising. Now, on the other hand, think about going into a Baskin Robbins here in the U.S. And they greet you and say, welcome, sir, what can I do for you? And they say, I want to have an ice cream. Chocolate ice cream is what I'm looking for. And they say, wonderful. White chocolate, dark chocolate, Belgian chocolate, Swiss chocolate, chocolate chip cookies. You got all this wide selection. What can you do right now? Pick exactly what you want. What is the difference between the first example and the second example? In the first example, you compromised and you did not get exactly what you want. In the second, you get exactly what you want. And this is what you want to do when it comes to trading. Out of several opportunities, you want to choose the best one. Right. Gotta move on. Based on these fundamentals, these are the three fundamental skills that you have to learn before you even think about trading a strategy. You have to be able to determine whether the market is going up or down. Why? Because based on the direction of the market, you might have to apply a different trading strategy. Again, if you are using a trend following strategy, make sure that the market is trending. If you cannot spot whether the market is going up, down, or sideways, you should not be trading. This is the first thing that you need to learn. And there are many ways how to do this, so send me an email or call me or read my blog or keep attending the webinars. Probably today we won't get into this, but in the upcoming webinars, I will show you how to determine whether the market is going up or down. If the market is going sideways, use a trend fading approach. If the market is trending, use a trend following approach. One of the main reasons why traders lose money is that they are applying a trend following approach in a sideways moving market. And then they wonder, why doesn't it work? Okay. Second skill, when to exit a trade. And it's hard. When to exit with a profit, when to realize a loss, and how to find the right market. So, we have to wrap up here. You want to have sound trading strategies, trend following strategies. We talked about Jesse Livermore's quote here. No magic indicators, based on the reality of the markets, easy to understand and execute, works in multiple markets and time frames. Okay. Very important. Why learn from mistakes when you can learn from experience? Again, we talked about this. Have a trading buddy, have a trading coach, have a trading mentor, and for yourself, keep a trading log. Learn from your own mistakes, learn from your successes, and try from somebody to get systematic feedback on what you're doing right and what you're doing wrong. I don't know, for those of you who have been playing golf, do you know how difficult it is to correct a bad golf swing versus learning it the right way first? If you have been playing golf for a couple of years and now you go to a professional and say, I want to learn it the right way, and he first has to unlearn or help you unlearning your bad golf swing to actually give you the right one, it's horrible. It's long and painful. So make sure that you're not over an extended period of time do the wrong thing, because in the markets, When it comes to golf, you just have a bad game. When it comes to the market, you lose money. And Riddler says it here, it's harder to unlearn than to learn. Okay, we probably got to keep this because there are a few questions here that I want to answer before. The only thing that I want to leave you with, and to survive today's volatile markets, take action now. Be a victor, not a victim. If you are watching your IRA going down, it's time to do something about it, right? Definition, according to Albert Einstein, of insanity is doing the same thing over and over again and yet expecting different results. Guys, since we do not have time today to talk about the trading strategy, please go to our website at rockwelltrading.com and you'll see it on the homepage. It's big there. It says live trading strategy. You can watch the video there where I explain this trading strategy. You can request more videos here with the trading strategies, and they're also available here on fxstreet.com. If you're interested in seeing this strategy live in the markets, also on our homepage, there is the information about the live trading room. As I said, check it out. See if this is for you. Give me $1. Give me a freaking $1 and for a week, okay? If this is for you, then you might want to continue this. If this is not for you, all right, keep looking. Find a trading strategy according to your goals. But maybe before even checking out my trading strategy here, how about right now, since we're done here, you're spending 5 or 10 minutes to write down the goals. And watch this recording, and we'll send you an email when this recording is available and up on the website. So we'll send you an email. You might want to go back and look at the slides with the goals, okay? So very quickly, here are the goals, okay? Because Boyke says show previous slides. Okay, for those of you who want to take quick notes, here is our website address. And let me see if there were a few questions. Moderator, do I have 2 more minutes? Just need to make sure because we have to empty the room here. There's a great other webinar coming up, and usually who's following me is Derek Fry. Is Derek coming in here today? Okay. Yes, Derek Fry is coming in here. Watch Derek. Great guy. Okay, so we had a couple of things here. Matt was suggesting go to meetpips.com, and Riddler says it is hard to trust self-proclaimed FX gurus. Absolutely, I agree. So Riddler says there's always morning somewhere. Best is London session or, yeah, you see, very important, just very briefly. The currencies move because of underlying interest rates. Again, go to my website, go to my blog. I'm talking about this, what really moves the Forex markets here. And it is the underlying interest rate. So you want to trade in those markets where the underlying interest rate markets are open. For example, if you're trading the euro versus the dollar, you want to trade it during the time when in Europe, the interest rate markets like the Bund and the Bobble is open, and when in the US, the bonds and the T-notes are open. So in US times, if you're trading euro versus the dollar, good time to trade is between 2 a.m. and 6 a.m. in the morning, and then again from approximately 8, all times are Eastern Standard Time right now, from 8 to 12 or 1. Now if you're trading the Japanese yen versus the US dollar, it's different times. So very important to do this. Okay, Boyke asked the second to last slide. The second to last slide. This one? Okay, let me go this up. Riddler says, okay, London Open. Yeah, we talked about this. Good, 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 good. The one before. Here we go. Is this the right one, Boyke? All right. Guys, okay, let me just quickly wrap it up here, and I just also see NYC's comment here. Would have lost my entire account if it wasn't for fxstreet.com. And I really want to thank fxstreet.com for being here, for inviting excellent educators and providing this free information. So thanks again, guys. I wish you a wonderful day. We have to wrap it up here because we have to leave the room. Thanks. You all enjoy, and I hope to talk to you soon. Bye-bye.